So we're here with the Duplito monkeys, and we're going to talk about money and a conversation I think that every family should have, especially during the pandemic. We start talking about how to grow your money, and that's called investing. And one of the places where we can grow our money is called the stock market. Who knows about the stock market?
You buy business.
You buy businesses. Very good. So let's pretend that this is the stock market. Okay. Okay. So in the stock market, that's sort of like a marketplace for, as you said, so that you can buy businesses. And these are businesses. Let's say this is one business, and that business is sliced into different pieces, many different pieces. So this business is sliced into 10, and each slice is called a stock. Okay, so this is what you must remember. The stock market is a marketplace, not just of when you look at the stock market, let's say when you're watching TV, the stock tickers are not just numbers on a screen. They represent a growing organization, right? And so when you buy one piece, what does it mean?
It means that piece will.
Louder, please.
It means that piece will grow.
That piece will grow if the company grows. Some companies don't grow very well. Some companies actually shrink. Some companies actually die. But if you do actually choose a company that grows, this little piece of that Blue bought, for example, no eating, nobody eats the stock market. This little piece that Blue has bought can actually grow in value over time. And that's how you make money in the stock market. That's how you grow money in the stock market. You choose a company that grows, and then you either keep it, you either sell it when it's already bigger, or you earn what they call our dividends. Questions? What are dividends? Okay, so if this company is growing, it will say, I earned 10 million pesos today. In this quarter, who can understand what 10 million pesos looks like? How big is 10 million pesos?
A lot.
A lot? You think? Yeah, okay. This is big, and then I will say, I want all my shareholders to be happy. So I'm going to give them a slice of the 10 million pesos. And I will call that dividends. So at a certain point, I give you portions of the earnings, the 10 million, and those are called dividends. But because I gave them to you, do you think I can use them to grow the company faster? Not anymore. So that's what is the difference between money given out as dividends and money put back in the company to make it grow faster. So I will ask you, as very young people who are invested in the stock market, would you like to get more dividends, or would you like the company to use the dividends to grow faster?
Second one.
You want the second one. How about you? Same. I don't know. Maybe tomorrow. Do you want the dividends? Do you want the sure income that comes with dividends, or do you want to invest the money further into the business so that the business can grow your money for you faster?
Doesn't that mean you won't?
Yes. Yeah. So you won't get the money physically, but you're hoping that because you did not get it, the company will grow faster, and that the slice of the company that is with you will grow faster over time.
Oh, so
You want the sure money now, or you want the bigger money in the future? You want the bigger money in the future. You're all investors at heart. Any questions, my dear young boys?
What if the company doesn't grow or shrink?
company doesn't grow, then the slice of the company that's with you will remain the same. If it shrinks, then the slice of the company that's with you shrinks. That's the thing with the stock market. That's why some people make money and a lot of people lose money.
What's the situation where it's best to invest on a company that gives dividends and a situation where it's best to invest in a company that...
Very good question. So usually when you are nearing retirement or after retirement, you need sure money, right? Because you are not earning actively anymore. You're not going to work every day, so you're depending on your passive income to sustain your lifestyle. So then you will need more dividends. So in that way, you're earning from your investments without taking out your investments. So your money's still there, but you're earning from dividends. But if you're young and you believe in this company, you have done your homework, you have analyzed the Snickers and you've analyzed everything and you believe that this company is really good. So every peso that's plowed back into the business will grow the business faster. And that's when you would say, okay, no dividends for me, it's fine. You can just grow my company faster. So it's either your stock price goes higher, you sell it at a higher price, that's capital appreciation, or you get it more dividends from the company, that's dividend investing. Any other questions? Yes.
What are the other benefits of a stock other than the dividends and selling it as a stock?
Yeah, basically okay, here's the benefit. If you are earning money from your salary, you are taxed when you invest in the stock market. You are taxed very little. Right? So it's better. So gaining wealth is faster when you are more dependent on passive income as opposed to active income. Right? So you can earn money and keep on earning money by going to work every day and paying higher taxes. Or as you earn money in your active income, you set aside a portion every month to put it in passive investments so that those are not taxed as high. That's how you make wealth faster. Seth is really good at this. Maybe you can become a financial advisor. Yes.
How do you know?
If this is a good stock to buy.
Yeah, if it's like a stable thing to choose.
Okay, so this is called fundamental analysis. So a lot of investors do two things: technical analysis and fundamental analysis. A fundamental analysis is where you look at the company, you look at the product, so that's one. You study the product. Whether if it's a bank, it's a service. If it's a company that makes soap, it's a goods-based company, right? So you look at the product, you make sure that it's innovating, it's changing, it's always the best in its field, right? If they have research and development investment in those products, then the company will do well. If the sales team is doing great and it will do great forevermore, then it will do well. If the management is doing well, then it will do well. If the industry is doing well and it's better than the rest of those in the same industry, it's doing well. That's how you choose the stock. So you don't just, but you know what? The biggest mistake of most people is just buying a stock because it's going up. Not because it knows the product, not because it knows the sales team, not because it knows the management, but just because, ooh, it's going up. And we think it's gonna go up more, and then I will buy now. And by the time they buy, it's at the top and then it drops. That's how people lose money in the stock market. So you need to, kailangan bumili ka ng stock kasi naiintindihan mo yung company. Not just because in the numbers it is going up, because that is the biggest mistake. That you buy a slice just because, uy, tomorrow, now it's 10 pesos per piece, right? Bukas daw magiging 20. Or next week daw magiging 100. Tara, bili na tayo. That's called speculation. That's how people really lose their retirement. Okay, question.
Okay, so what's what's the best businesses do you think is to invest
In this pandemic, so when in March, when things started getting really crazy,
Mm.
the companies that the companies that enjoyed a good rise in the price are the companies that people still use during the lockdown. Like you still turn on your electricity. So what company is that?
Electricity.
So like Meralco. You still use water, so Manila Water. You still Netflix, for instance. In the United States, a lot of the things that really grew in the value of the stock price are things that people used during the lockdown. The things that lost are banks, properties, because you can't sell property when people are not going out to look at their properties or to buy. And consumer items, because people aren't buying enough food in the malls. Those kinds of companies lost their value and now they're cheap. And you realize that when the lockdown ends and people eventually come up with a vaccine that will treat COVID, where will people go first? What will they buy first? They will start buying house. They will get a haircut, yes, their shoes and their bags.
and then it starts all over again because one of them will
And COVID again. Wag naman, grabe ka. Okay, so in fact, if you look at it, people are avoiding those kinds of stocks now, but that's the best time to buy them. When people are avoiding them because
it's cheap.
because it's cheap, and that's how you make money. Oh no! Hello! Oh wait, hey, no chocolate. Okay.
What about the one?
Do you have any questions about the stock market? Where can I get food?
Well, how would you manage it if you were you're not buying the stocks now, you're the owner of the stocks, the whole business. Well, how would you manage?
When you buy a stock, even if it's just one slice, you're the owner of
No,
the
but
whole business.
No, you're selling. Alright, so let's say you have 100%. It starts at 100%, right? And then instead of buying the piece of that 100%, you're selling the piece of 100%.
You mean you're the company?
Yes, there. Like, how is that? Thoughts on that?
Yeah.
Okay, so you're talking about
yeah.
maybe what Blue wants to say is that, let's say for now I own a tempura business.
Yes.
I sell tempura because
Yeah.
you like to buy it and you like to eat it. Okay, wait, but you can't have it because my company is not listed in the stock market. So I own 100% of it. What I do is I apply for listing at the Philippine Stock Exchange. When it's approved, then I have the right to sell parts of the company to the public, to anybody interested. And that's called listing. When that happens, my 100% ownership will go down to, let's say, 20%, and 80% can be bought by anyone at all who's interested in buying. Whether a foreigner, somebody who lives in the United States, or somebody who lives here. Is that what you were asking about?
So with your whole company, you actually own less of it than like the other.
Yeah, when you list it, some people are more majority shareholder, like they own a bigger chunk, and some people are minority shareholders because they own lesser parts. But you still have the same rights. That's what's important because your vote is per share, right? But you still have a right to say, let's say, even if you own just one share in a particular company, you can raise a question and essentially the board of that company actually works for you. So you can ask them questions, you can complain about stuff. You can make sure that they're transparent in all their dealings, so that, let's say, they're not buying things overpriced and they're earning on the side or under the table.
So,
Even if you own just one share, you can actually ask for accountability. Everyone.
that's really it's like either a good thing or a bad thing.
That's a good thing, because you want to protect the small investors, because usually they're trampled on by the people who have lots of money.
So for example, I have a stock from this restaurant, and then I go to the restaurant.
So let's say Max.
Yeah.
Max is listed. You like their chicken. So you buy one share in Max. So when you go there, you're like, I'm part owner of this company, right?
Yeah.
Yeah. And then
And then you're like, oh, this chicken is not good for people's health.
you discover
And then
something.
you can complain about it.
Yes.
But
Actually, you can complain even if you don't own the company. Even if you're just a consumer, you can complain. But as a shareholder, then you have a maybe more weight. You have more weight because you own part of the company.
Or maybe like they deal with you first before consumer. Is that it?
Not really, because consumers are also protected under the law. So be careful. Your cheeks. I have ownership of these cheeks.
Now!
But doesn't that mean another company can make people buy someone's stuff and then make them do a really bad thing? Like someone can sabotage
Yeah.
other businesses.
So you have an evil mind.
No,
You're
this-
thinking
this is-
like but you know, that's a very important skill. In order to catch the bad guys, you have to know how to think faster than the bad guys. Yeah. I'm very proud of you for having a criminal mind. That's true.
Characters.
It's possible, actually. So I think the system will vet any complaint before it's acted upon. So let's say you go to the Department of Trade and Industry to say that a particular milk tea to say that a particular milk tea is making people lose their height. So people are shorter every time they drink the milk tea. But they will have to vet your complaint first before they go after the company.
Also, like make sure it's
Yeah,
it's
it's not. It's true.
okay.
So it's good to have lots of friends from different companies also to like know what the state of the company is.
I mean, if you're using a criminal mind, you wouldn't call them friends. You'd call them acquaintances. If you're trying to take down their company, acquaintance, not friend.
Hey, you know.
Oh no no no!
People
If
are
you're
friends
trying
as
to
well.
take down a company, you should be friends with them.
Yeah.
Yeah, because then you'll be trusted with information that you shouldn't have. I'm sorry.
Yeah, so I said friend.
Yeah.
But like,
Friends.
would you really be true with that friendship, trying to take their
Of
income
course
of
not.
money?
You're a criminal.
It's not business anymore, it's criminalism. Is that a
So-
word?
It's a lot about connectivity as well.
Connections are good. Okay. There are different facets to your question. Because if you're a stockholder, based on the rules of the Philippine Stock Exchange, no stockholder should have material information before anybody else. So if you have material information from the company, let's say one of the board members of the company told you that tomorrow they're going to sell a big chunk of the company to somebody from outer space, right? And so
Outer.
you can now, because tomorrow it's going to be done, today you can buy while the stock is low so that tomorrow you make a lot of money. If that happens, you are guilty of what is called insider trading. So the reason why that is a rule in the Philippine Stock Exchange is to protect precisely the minority stockholders who usually don't have connections inside the company to learn things. So shares, whether you own 100, 1,000, 1 million shares, or just one, right? But it's also good. So that means that if you're investing in the stock market, anybody who has a good skill in analyzing, in researching, can actually choose the best stock even if you don't have any connections. That's the idea behind this Philippine stock market. However, it's also important that you know people so that when you do your research and you find some numbers and you want to understand them better, then you can call up people and what do you think of the things that I saw in the financial statements, etc. And if those are public information, then you can find the information faster and then you can make better analysis.
Will the one who's guilty be the one who disclosed it, or the one that heard it?
Trade both.
Both.
Pero insider trading, you really go after the person who made or who's trying to make money. But they can both be liable. For instance, the company, if there's a board member from a company who discloses information to somebody who's trying to make money through insider trading, he will be fined by the Securities and Exchange Commission for disclosing information to a favored investor. Okay, so it's time for food. Is it? Yeah, it's free. You're all done with your questions?
No,
Alright,
I'm
I wanna
not
make some
sure.
more, but
I'm
like,
probably going
I
to
can't
think
think
of
of any.
something.
Yeah, we can do a